Welcome to Achieve Wealth through value-add real estate investing. This is the show where the guru hype is banned and you get direct insights from commercial real estate operators. If you're a passive investor, this show can help you better understand investment opportunities. And if you're an active investor, the lessons from each episode can help you to become more effective in your own deals. Now, here's your host, investor and author, James Kandasamy.
Hi, this is James Kandasamy. Thank you for listening to this podcast. I appreciate you. I know I provide a lot of value through this podcast, and I want you to share it with your friends, with your families, and anybody else that you know that kind of benefit from listening to this kind of content. Go and share it through Facebook, through LinkedIn, through Twitter, through Instagram, or any other channels that you want to share it, because sharing is caring. Thank you. Let's go on with the show. Hey, audience and listeners, this is James Kandasamy from Achieve Wealth Through Value at Real Estate Investing podcast. Today, I have an awesome guest. His name is Ronny Philip. Ronny is from Dallas, part of Kinkley Acquisitions, who owns almost 572 right now, asset under management, and focusing a lot in Atlanta and Texas, right? Texas market in San Antonio. Say, hey, Ronny, welcome to the show.
James, it's an honor to be on your podcast. So thanks so much for having me.
Thanks for coming in. I always like to bring people who are able to add value to our audience. I know you personally, and I think we met like 3 or 4 years ago, or maybe 2 years ago. I can't remember, but we know pretty for the past few years. And, I'm just impressed with all the mindset and the progress that you have made, being in, mid-20s, right? So, and you're doing big things. So why not you tell our audience about yourself, whatever I missed out, then, something about yourself before we get started into the more detailed topics.
Okay, great. So I guess we can start out from my very beginning of my real estate career. I started in 2015. I dropped out of college when I was 21 years old. End of 2015, my background is medical, actually. So I've done a lot of things in the medical field, from home health to working at hospitals and then pharmacy. And I was applying for pharmacy school end of 2015. And then I realized the job market back then was really tough. So people weren't able to get jobs full-time in pharmacy. So by the time I would graduate, which would have been this year, 2020, I just didn't feel like that outlook would have been great. And I was right. A lot of my friends who are in pharmacy, unfortunately, aren't able to obtain jobs. So I think one gift God's given me is foresight. So I was able to see that. So that's when I got into residential real estate as an agent. So I started off as an agent, helping people buy and sell homes, and then went into flipping houses, with investors. Just kind of went from there. So helped my dad with flipping houses. So pretty much from finding the deal to rehab, everything from start to finish. And that was pretty good. And then I realized those two businesses weren't scalable. So end of 2016, I realized I need to find a different way to create wealth, because you can't build up a residential real estate team as an agent for like a major brokerage and then sell it for a good equity multiple. I realized that because a few of my friends did that. And I wanted to build something I can build up and sell, and something that's backed by real, true, hard assets. And I saw in the single family space that wasn't scalable as well. So I decided June 2017, I formed Kinkley Acquisitions, and I was like, okay, I'm going to end of 2017, I'm going to finish out my residential stuff and then only focus on multifamily and moving forward. So, and that's when I met you. I met you at a conference, and we became friends, and the whole story from there. I remember literally a month after a conference, you posted in a Facebook group, hey, there's an opportunity to learn, like do due diligence and stuff, right? So I drove down to San Antonio and then helped you on one of your acquisitions, from lease auditing to unit walks. And I learned quite a lot. And it's crazy, I think probably less than a year and a half later, I closed on my first deal in Texas. That would be my third deal, 208 units in San Antonio. So I think the power of visualization is real. So that's kind of my background.
Absolutely. I mean, you have gone a lot. So I want to go back to the beginning and also make sure that I don't miss out some of the details that you have given. Is this your first podcast?
Multifamily, I think so. I don't
Oh,
think I've
awesome.
done any
Awesome.
other interviews. I've interviewed a lot of people, but
I
I
know
haven't
you have
been on
interviewed a
this
lot of
side.
people. Now you're being
Yeah.
interviewed by me.
Yeah.
So Ronnie used to have maybe he still has it. It's a TV show, right? I can't remember what's
Yeah,
the
I have
name of
two.
it. Yeah, he had that too, right? So he
Yeah,
does
the
a really good
Ronny
job.
Philip show. Uh-huh.
The Ronnie
And
Philip
then
show,
the
right?
commercial cash flow show.
Yeah.
So
He does
those
a
are my
really
two.
good job interviewing people, but now he's getting interviewed, so it's my turn right now, right?
Yeah.
So I think one thing that I want to make sure that the audience and listeners understand when Ronnie says that I posted in a Facebook group. I basically posted for help for due diligence for one of our property in San Antonio, and that group was like 20,000 people. And while that group, 20,000 people, is actually a multifamily Facebook group where all the 20,000 people want to invest in multifamily. Everybody want to do it, but there's only one person who said, "Okay, I'm going to come down tomorrow." Right? Not because he's in San Antonio, he's in Dallas, and I'm sure there's thousands of people out of that 20,000 from Dallas and California, even from San Antonio. But the burning desire to really learn, it's only being shown by the people who are really serious, right? I mean, as I said, there's 20,000 people in that group. Everybody want to be multifamily investor, but when someone tell them that, hey, there's a free training here, come down. I'm going to give you guys a free training. That's what exactly I mentioned in my post. I say I did help with some due diligence. You guys come, you can learn. This is real hands-on. But I start seeing everybody giving reasons. Oh, I got something tomorrow. I got something today, and I don't want to. I wish I'm San Antonio. Well, I mean, to be really successful in life, you have to take action and you have to make the move. And that's why Ronnie, now he's owning like almost 572 units because he took the action, right? So if any of you listening who thinks that you want to be a multifamily investor, who love to be a multifamily, really ask yourself whether you really want to be or not. Because people who really want to be would take action and would take the first step, right? Especially when I was giving a free training. It's a on-site training. No gurus out there teach us on-site due diligence, right? Everybody take a tour bus, a bus tour, go and show you the outside. This is what we buy. They show you the number on Excel. They do 2-day conference and they sell all kind of courses, right? But I was saying, hey, come and I'll show you the real stuff, and people didn't want to do it. So I'm just saying that, when someone said they really want to do something, most of the time they really do not want to do it. I mean, they just don't have the burning desire. But people who have burning desire, I mean, the people that you have seen out there who has been very successful, they have taken the action. They really, really have a burning desire. So that doesn't mean you can't change your wants to a burning desire. You can. Just make sure you go deep into yourself and ask whether you really want to do it or not. So I just want to give a credit to you because I remember very clearly when I post my requests in that group where we had like almost 20. Now I think that group is like 30 over 1,000 people. Now out of 20,000, maybe 5 people responded giving reasons, and one person said, "I'm coming tomorrow," and that was you, right? And I'm sure you really learned a lot on that day, right, when you come, right?
Oh, it was absolutely a great learning experience, and that helped me not only in the tangible skill sets, the property walk, what to look for exteriors, interior walks, lease auditing, all those different things help me get to really understanding when I go and do my own deal, what to look for. And it's just crazy, like a little over a year later, closing my own property in San Antonio, it just blows my mind. I own in San Antonio now.
Yeah, yeah, absolutely. I mean, yeah, you have to take action. Once you take action, you should be able to, get somewhere, right, rather than just talking, right? So there's no point of doing that. So you had a good foresight that, if you graduate this year, 2020, right, it's going to be a bad year for any jobs right now, right? Because we have like almost 30 million people right now unemployed, 20 or 30 million people, but it's a lot of people unemployed, and it's just not the best market for any jobs right now. And what was the biggest issue that you saw in single families? You said not scalable, not able to sell. Is that the biggest one? And how many single family did you worked on before saying that multifamily is the way to go? And how did you get that aha moment, that multifamily?
Yeah, so I guess on both sides, coming from the agent side and on the investment side, not sure the number of transactions, well over 20, I would say. I think just realizing on the agent side, when you build up a real estate sales team and you become an agent and you're having like 30, 40 people working for you, and the revenue is like, I don't know, 1.5 million, right? As far as commission, you can't really sell that. You can't sell that team for any money. Like I know one friend, he was the top agent in a major market, right? I saw multiple case studies: Phoenix, North Carolina, and then Alaska. And they sold their businesses between 80 to 120,000, something that they built for 6 years. Yeah. And I was shocked. And then maybe that's some, 2-year referral fee and stuff. And then when I realized, I went all in. I joined a mastermind, dropped like 12 grand on a mastermind. And I was like 22. It's not like I had just a ton of money lying around, but I invested myself to accelerate growth. And I've always done that in expansion mode, especially in our 20s. Like, it's really important to be in expansion mode. So I realized on that side that that's not scalable. And then when I started flipping, doing, few projects a year, I'd say probably 3 or 4, but those 3 or 4 projects, like doing everything, right? Managing the general contractor, sometimes doing subcontracting, trying to get the project together, sourcing materials, finding deals, being on wholesalers list. I literally used to get 100 emails a day, and I got sick of it. And I realized, like, could I have scaled that business? Yeah. But did I want to? No. Because I think it was after going to that conference and meeting you, I came to the realization that, hey, this is actually something that's scalable if you can work hard. And it takes the same amount of effort to do a big deal as it is to do a small deal. So that's from a book called What It Takes, Pursuit to Excellence by Steve Schwarzman. He's the co-founder of Blackstone. So I realized it wasn't scalable when it came to that. So I just thought, like, whenever you build a business, like, can you build it up to sell it? And if you can't, why are you in the business? It's like, let's just say something happens to me or whatever, right? Would I be able to pass this down to my family? On the single family side and on the residential agent side, it's really, really hard to. So,
I mean, you are 26 years old, right? I mean, you probably, when you started, you were 24-year old. I mean, you are looking at, so yeah, okay. So you said, forget about single family. Now I want to look at multifamily. Did you have your age has a limitation there? I'm a young guy, all these guys are, now how am I going to buy these multi-million-dollar deals? Did you had that limitation on yourself, and how did you overcome that?
I never really looked at my age as a disadvantage, to be honest. I feel like I have an advantage because, like, ask anyone, right? James, if you could go back to 26, like, how much money would you pay to go back to 26?
We pay a lot.
Exactly, right? But that's nothing no one can do, right? They can't go back in time, right? So I think as far as age goes, I felt like that was an advantage.
Yeah, it's very impressive. I mean, I'm sure a lot of listeners out there who are listening to you, right? A lot of them are agents as well, selling single family. And I never understand why a lot of agents like to do transactions. I mean, same thing with brokers, right? Multifamily, but a lot of them just like to do transaction. I mean, maybe I not say I don't understand. I can understand some people like to do transaction. They don't want to take less risk, because once you come to the investment side of it, you're taking a huge risk. So your mindset, your characters, your tolerance to risk is different, right? I can understand why is that. But I mean, with the knowledge that any agents have, they can make a lot more money coming into the investment world. Is there any advice that you want to give to any real estate agent on why they should move on to the investment world and not just do, buyer's agent versus seller's agent, even though that seems to be, very lucrative?
Yeah, I think, it all depends on your preference, right? So I think being an agent definitely has its advantages. But one thing I learned is, like, if you stop being an agent, then what happens? You know what I mean? Like, where is the money you're making going, right? If you're investing in properties, whether that's single family or investing passively in apartments, or, being a general partner on a large apartment complex like what we're doing, you just have to really see what it is. So advice for agents, let's just say, I'm going to give advice to someone around my age, let's just say they just got out of college, right? And they want to do what I'm doing. The path I would recommend them taking is, let's just say they're 22 right now and they just got a finance degree, right? What I would do is I'd go work at a large brokerage, right? Marcus & Millichap, CBRE, Cushman, JLL, any of these ones, right? Be an analyst, learn that side, then get into investment sales, right? And why? What are the skill sets in multifamily, right? Net worth, liquidity, track record, raising equity, sourcing deals, asset management, property management. The list goes on, right? So I think it's building skill sets one by one by one, because whenever you're young, most likely, unless you sold a tech company, you'd have a big balance sheet or liquidity, right? Well, you have other aspects in that list of skill sets as a general partner on what to do, right? So I'd start off as an analyst, then go into investment sales. And why is that? You build the skill of underwriting, right? And keep in mind, a broker's underwriting and a principal's underwriting are almost always different, right? Mm-hmm. So do that, then get into the brokerage side, and you start building relationships with owners, and you want to become known, right? So become known in the commercial real estate space. You can be the broker, right? There's a lot of younger guys in the field that I really admire just because of their work ethic, right? So they become owners. And then what I do to transition to the GP side is I'll start investing passively into sponsors I want to partner with, right? For example, James, say I'm a broker, right? I'd start passively investing in your deals, right? Whether it's I'm selling you a deal or whether it's another one, right? And I would invest in markets I want to know about. San Antonio, Atlanta, Dallas, Houston, Phoenix, you just name it, right? Whatever market you want to be in. And I feel like that is a good transition to becoming a principal. Another alternative would be trying to go work for a sponsor like James or like myself or like any of these groups out there. One thing I've learned is that is very free, right? Whenever it comes to that aspect. So that would kind of be my advice on people wanting to get into the business is understanding being a broker, it can be lucrative. Being a general partner can be lucrative, and being a passive investor can be lucrative. Study all three and decide which one you want to do. But there's a certain path that comes to all of them.
Yeah, right now even I've multifamily brokers and I've sponsors as well, investing passively with me as well, right? So there are certain reasons why they invest, but it's a good way to learn how other people operate, right? Sometimes you think you know everything, right? But you're absolutely right. I mean, you can go and work as an analyst. You can go into the investment sales and learn how the business is done or get to know how the true business, right? I mean, sometimes our circle of friends or circle of influence is so small. We think this is how it's being done. But, I can tell you there's like 3-4 levels above any level that you need to be able to explore and able to grasp what are the complexity, right? And you can really learn a lot from that levels. So, I mean, you have done a lot of investor relationship building, and you've looked at a lot of deals, and bought some of it. And at the same time, what do you look for in a deal when you look for a deal?
As far as deal wise, so I'll give you our markets. Texas and Georgia primarily. I like Tennessee and Florida as well. But I think primary focus is definitely Texas and Georgia. Primarily, we focus on B and C class value add, true value add, where there's actually room for growth as far as rents go, as far as management goes. One common denominator on all the deals I'm in is there has been management deficiencies. There's always ways to improve that. And the guys I've partnered with have brought property management in-house. So that definitely helps a lot as far as, making things run more efficiently. And so the markets I'm currently in are Atlanta, Georgia, specifically submarkets, Stone Mountain, and then it's like East Point area, but Atlanta proper, just 4 miles west of the airport, and then San Antonio on the northeast side. So we're looking for pretty much every value add, right? So I think, it has to have a diverse, employers. Job growth does definitely have to be there. So those are some of the things I look for.
Got it. And I also understand that you are able to bring a lot of, you build a lot of connection with investors, right? To raise money from them and invest in this kind of deals. And I think you have tried out many different methods, in connecting with investors who are looking for this kind of opportunities, right? Can you talk about some of the methods that you think are very efficient or most successful? And what do the investors look for when they want to invest, like 50, 100,000 or 200,000 with you?
Yeah, that I think, really first and foremost is caring about investors as people is really, really important. That's definitely important. As you're raising money, this is a mindset you actually instilled in me.
Okay.
And I didn't know any better, right? So you're just like, Ronnie, raising money is the easy part, right? So I just said, okay, raising money is easy. And that's what I'm known for is, that's one of my strongest skill sets in a general partnership is raising the equity, right? First, you got to really make sure you understand what your investor wants. I think it's having like a really, really thorough process. Let's just say, hey, James, I meet you at a conference, for example, right? What I'll do is I'll get you a card. I'll follow up with you, within the next day or the next week or so, right? And then set up a time for a call, schedule a call, and then I just start asking them specific questions. Hey, what's your, tell me a little bit about yourself. What's your background? Did you invest in single family? Have you invested in multifamily before? Are you a cash flow investor? Is that really important to you? Or are you a value add investor? Or are you a hybrid? Our minimum is usually between 50 to 100. And we do probably a deal a quarter. Want to see what markets you invest in, what your capacity is, right? As far as it, because we have different types, right? And then, understanding if they're sophisticated, understanding if they're an accredited investor or not. And then I label it in my database and go from there. And then I'd be sure and stay in touch with them, just kind of go from there. But it's building a true relationship when it comes to investors. Like one thing I always like to say is my friends become my investors and my investors become my friends. Okay. So it's all about building the right relationships with people and understanding what their goals are. Like, for example, let's just say my dad, he's, is in his 50s and he's retired, right? And his primary thing is cash flow, right? So that's a different type of investor. If I have a deep value add deal, right? He wants the cash flow, right? Well, let's just say a younger guy like myself, right? I like value add deals. I don't really need that much cash flow because I can take more risk right now, right? So you have to understand what type of investor you have and then label it accordingly in your database and stay in touch with them. They're not just investors, they're people. So that's what understanding what their long-term goals are and how can they grow together. Like how can you help them grow in their investment experience? How can you make it the best experience possible? What are some things we can do? Like I do videos, updates. I keep in touch with my investors, right? Every time we do a monthly update, say, hey, did you get it? Did you have any questions, right? So I think it's really caring about the investors as people is the most important thing. And really getting detail when you're having an investor call to really understand. And just go into detail, ask the hard questions. And that you can, for example, let's just say you're doing a 506c offering and you can only do accredited investors. On my CRM, I can just click accredited investor and it pulls up a list of people. And I take detailed notes of every call, right? And a lot of people I've seen who have struggles in raising equity don't take the time to really understand who their investor is. And then also understanding, hey, which markets do they invest in? Some of my investors, Texas only, right? Some are like, hey, as long as it's the same type of criteria. And then you have to understand ask them what their expectations are, cash flow, returns, IRR, equity multiple, whole time, right? Ask them that first and then say, hey, this is what our acquisition criteria is, and then see if it matches.
It's very interesting. So let me break it down a bit more because I think it's very important for any, people who are looking at raising money from others to understand, and also for passive investor. I mean, you want to look for sponsors who are really asking all these questions because it shows that they care about you, right? I mean, so what you're saying is ask them about, themselves, at the same time, ask about their investment goals, whether it's cash flow, whether it's equity multiple or they're trying to do multiply their equity, right? For value add investors, I guess. So just keep on going into details of what is their understanding. I think that people know that you really care about them. You're trying to just understand, what's their objective in investing with you or investing in real estate, right? That's very valuable method that you have just let us know.
Yeah, I just think it's really important for people to do that up front because as you get, let's just say you go to a conference, you get 20 business cards, right? You can't just keep those stacked for a while. There's like a certain amount of time where it just becomes awkward to follow up after like 2 or 3 months or whatever, right? So I think following up immediately after you talk to them is really, really important. And then getting a time to set things up and making sure you have everything tracked. So that way you can just really understand what their goals are. Hey, I'll be ready to invest in Q4. I'll have a few full deals that sell at the end of the year. Oh, I'm ready to invest now, right? Because some people want to invest with you, but they can't because they're not liquid. So that's another thing to understand is your investor's timeline.
Correct. I think just keeping that relationship is just so important, right? People appreciate you and they know that you're serious and they just have that trust with you, right? I mean, end of the day, we are trying to have a win-win situation where they are trying to find an opportunity, and as a sponsor, you are trying to raise the money for your investment deal. So
another point I would like to add is I'm not raising money from investors. I'm providing them an opportunity to invest.
Absolutely.
Right. Because I think it's a different mindset. Whenever you feel like you're raising money, which you essentially are, right? You don't want to come off as desperate, you can say, right? Because there's actually only a few limited spots on the deals. Like our deals fill up relatively fast, right? Even like the San Antonio deal. I mean, that was the fastest raise I've ever done. Like it was every deal is so different, right? So it's just understanding that and then not putting pressure on investors, like say, hey, let us know. Like we even had a deal we had under contract during COVID, right? And very, very large deal, very large equity raise. And, I was raising money for that one. Everything was, going well and stuff. And then the whole shutdown happened, right? And then people started messaging me and say, hey, I want to invest in the deal, but I'm not sure what my business is going to look like in the next few months or whatever. I said, no problem. Whenever you're ready, just let me know. So it's not you shouldn't be pressuring whenever it comes to talking with investors, but you also have to have a sense of urgency as well. So it's a healthy balance.
It's a skill by itself. I mean, not a skill, it's just a gift by itself, right? On how you communicate to the investors. And people love that, right? When you are being open and direct and honest about it. It's just how the raising money communication works with the investors, right? So you have been into a lot of due diligence of properties. Is there any due diligence that you thought was like, I didn't think about that. That's very interesting aspect of the deal, or something that you learned during due diligence that you want to share with our audience?
As far as due diligence goes, I think it's really, really important to have the right team. So the guys I've partnered with the past 3 deals, it's the same core group, right? I think all of us have complementary skill sets in getting things done. Even having property management in-house, like when we're doing due diligence on a deal we had under contract earlier this year, it helped a lot. Everything was in-house. We had the lease blocks and stuff. So I think it's really making sure you have the right team. As far as deal specific, on one of the deals is like the stab blocks. So realizing
you found a deal with stab
expensive. Yeah,
I haven't found it. I know about it. I mean, just for the audience, a stab lock is actually a circuit breaker, electric circuit breaker, which can cause a fire to be, easily triggered, right? And the insurance for it is expensive, and sometimes the lenders can give problem when you have stab lock. But it's a very subtle way of. You have to really know when you're doing due diligence to look for this kind of things. So go ahead. You're saying about this.
Yeah, and so having like an experienced team. Yeah, so I just thought that was surprising, because I've done due diligence on many of your deals, many of my own, many for other sponsors, and there's always something new when it comes to that. But I think having the right team, like having a construction team on site, all the different trades, do everything in one day, ideally. If it's like a 200 unit deal, usually will take like a day. If it's like more than that, it'll probably take like 2 days, right?
So that stab lock breakers was found by the sponsors, or was it found by the inspector? Because it's very tricky to find that. Both found it? Okay. Yeah. Was it like you guys didn't know before buying the deal? Only when you walk it, I'm
not sure on that. Yeah, I think so.
Yeah, must be they didn't tell you.
Yeah.
Don't tell you.
Yeah, so we found that, and then, that's being addressed. So I think that's important. And so also, I mean, lease auditing. Go ahead.
Before I go to the lease audit, I mean, I just want to make sure that I communicate this to brokers who are listening. Please let any major things that you already know, to any buyer who's coming and visiting, you want to let them know, because you do not want to, them get caught after the day one hard money, right? I've seen brokers who, hide things from me, right? And I don't really appreciate it, because it's like you're trying to trap us into into a day one hard money, and now you cannot get out, right? I mean, if you find out about the step lock breakers later on, I mean, I walk properties on my own, me single guy with a broker, and I told him, hey, this property has a step lock, and I do not know whether they know or not, but I'm surprised they didn't know. I mean, these are experienced brokers. These are not like newbies, right? And I would really appreciate any brokers, step lock, any asbestos, right, on the drywall. Please please let the buyers know, so that we can get the transaction closed smoothly, rather than having a surprise. We don't want to feel like we got caught by the brokers. And of course, brokers can say they didn't know, right? But if they didn't know, I mean, I question their experience level, right, and their credibility. And same with sellers. I mean, the buyers also want to have a long-term relationship with brokers. So we really, really appreciate, brokers letting the buyers or sponsors know all the issues with the property, so that when we buy, we are going on a smooth sailing. Especially now with pre-COVID, I mean, post-COVID right now, right? We're in a buyer's market. Day one hard money. So last year, yeah, you want to make sure you tell everything so that transaction goes smooth. Come back to you.
Yeah, I think transparency is key. I was just going to add on, like, lease auditing, having the right property management team, like the guys I've co-GP'd with, they have a person like 20 plus years of experience. So time is something that they have, right? So I think as far as experience goes, so having the right team is really, really important. And then focus on what you're strong at, and then what you're not so good at or still learning, have other people on the team be able to take care of that.
Got it. Is there any proud moment in your life until now? I mean, I know you're still 26, but at least you have like 3-4 years of multifamily experience, right? Or real estate experience. Is there any proud moment in your life that you think that, I cannot forget that until the end?
Yeah, closing my first deal. That was probably something I'll remember forever. It was that deal was 212 units in Atlanta, Georgia, and it's crazy. It's between my first deal and my second deal. I think it's probably less than 3 weeks between my first closing and my second closing, because we both under contract. That was kind of interesting. So, and then signing my first Fannie Mae loan on my first deal, that was pretty cool. So having that experience. So I think doing the first deal is always the hardest. And then doing the second one, it gets a little bit easier. The second one's like a bridge loan. And then every deal is so different. I think it's about being consistent, doing transactions and doing quality deals. Like all our deals, certain the values have gone up because we bought it at a right price, So that was probably what I'm most proud of. And then, just continuing to grow. I just don't think it's normal. Like my 2019 did 572 units, 3 transactions. I thought that was pretty good. But knowing that it doesn't stop there, right? I want to continue growing and partnering with quality people like yourself or the guys I've partnered with is really important. So that was probably what I'm most proud of.
So where do you see yourself 5 years and 10 years from now?
So 5-year goal, I do more of like by time I'm 30 goals. So we'll just do that. So time I'm 30, I'm 26 now. I want to be top 50 NMHC owners, $1 billion in assets under management by the time I'm 30. As far as a 10-year goal, I want my multifamily business to always be the foundation, but I really want to grow into the private equity space and, raising a fund and buying deals. Like I'd love to raise like $1 billion fund, an equity fund, and, provide joint venture equity to other sponsors and different things like that. But there's levels and to everything. And, obviously doing new development and construction. So, and then being able to give, I think that's really important. Like, especially for people either not wanting to go to college or transitioning out of it. What is that step? Like maybe I can create some sort of internship program at the Kingly Group and Kingly Acquisitions and help people get into multifamily, especially when they're young. And then, being able to give back, right? I think that's really important. Building an orphanage in India, like that's one of my goals. And that's I think giving back is really important because we can make all this money and we can do all these things and have all these units, but having a direct impact on your residents, on your partners, on, just people in general is really important to me.
Got it. Awesome. All right. So, Ronnie, why don't you tell our audience and listeners how to get in touch with you?
Yeah. So, best way to reach out to me, just any social media, you can just search Ronnie Philip on Instagram, on LinkedIn. Connect with me on LinkedIn. That's probably the best way. And we'll go from there. And if you all have any questions, don't hesitate to reach out to me. I'm pretty open, transparent guy. And,
awesome.
And you can also find me on YouTube. Ronnie Philip's my YouTube channel. So I'll start doing a lot of different blogs day to day as a young apartment investor. So those are the best ways to reach me. And I'm sure you have my contact info in the show notes. So
yeah, we'll make sure we put that in. So thanks for coming in. Sure, you added tons of value for a lot of people who are trying to get started or already been started, have started in this multifamily investing. Thank you.
Thanks so much for having me on the show. I appreciate it.
Absolutely.
That's it for this episode. If you'd like to learn even more, check out James's free audiobook. It's the audio version of his best-selling book on passive investing. You can get the audiobook completely free, along with other valuable resources, by visiting www.achieveinvestmentgroup.com/free audiobook. Also, be sure to join our Facebook group too. To find it, just do a Facebook search for Multifamily Investors Group. Thanks for listening. Join us again for another episode next week. See you then.